The Reserve Bank has kept interest rates on hold for a second month in a row at 4.1%, offering some relief to Australians with a mortgage. The RBA said keeping rates steady will give it more time to assess the impact of the 12 rate rises that have already hit Australia's economy since May last year.
The Reserve Bank has kept the cash rate on hold again. And that's great news for Australians with a mortgage.
This will be a big relief for Australians with a mortgage. This is a welcome reprieve for Australians who are already doing it tough enough.
The central bank has lifted the cash rate 12 times since May last year, the sharpest tightening in a generation.
As you get closer to the end, you've lifted interest rates a long, long way, you're slowing the economy, inflation's past its peak, and the labour market's starting to show signs of loosening a bit. As you get towards that last decision, do you do one more or not? And that's where it gets very tricky.
RBA Governor Philip Lowe said the board kept rates steady again this month to give the RBA more time to assess the impact of those 12 rate rises on the economy. So interest rates on hold for the third time in 5 months. But the question every mortgage holder wants to know is, has the Reserve Bank done enough, or will they need to go again? Governor Lowe said while many households are experiencing a painful squeeze on their finances, inflation is still too high in Australia at 6%. He said, some further tightening of monetary policy may be required to ensure that inflation returns to the target in a reasonable time frame, but that will depend upon the data and the evolving assessment of risks.
Now, the test for the government here is clear. We need to see the inflation rate move back in the 2 to 3% range. We need to see it move back into the 2 to 3% range, and we need it to stay there.
The Reserve Bank will release its quarterly economic forecasts on Friday.